Nigeria's central bank has introduced new minimum capital requirements for banks, pegging the minimum capital base for commercial banks with international authorization at 500 billion naira. This comes few days after the Apex Bank had urged Nigerian banks to take urgent action on the recapitalization of their capital base in order to strengthen the financial system. Now, the CBN had also pegged the new minimum capital base for commercial banks with national authorization at 200 billion naira, while the new requirement for those with regional authorization is 50 billion naira. Now, the bank, however, fixed the new minimum capital for merchant banks at 50 billion naira. According to a circular signed by the Director of Financial Policy and Regulation Department, Haruna Mustafa, all the banks are required to meet the minimum capital requirement within 24 months, commencing from April 1, 2024 and terminating on March 31st, 2026. Consequently, the 5 top banks in Nigeria with presence abroad are supposed to have a combined paid-up capital and share premium of 2.5 trillion naira. That's at 500 billion naira each. But reports say that based on the latest financial results of the top 5 banks, their combined paid-up capital and share premium currently hovers around 1.37 trillion naira, representing a shortfall of 1.472 trillion naira. And the CBN hopes that the move will be sufficient to enhance banks' resilience, solvency, and capacity to continue supporting the growth of the Nigerian economy, especially as the federal government under President Bola Tinubu works towards a $1 trillion economy. But as banks scamper to meet the new target, some financial experts are advising that the policy be reviewed or stepped down due to the current harsh economic climate, so as not to further weaken the economy. All right, to help us understand the new CBN policy and the likely implications, we have joining us in the studio an experienced policy strategist and group CEO of the Global Investment and Trade Company, Baba Yusuf. Thank you so much for joining us on the program.
Thank you for having me, Sumna.
Yes, so, President Tinubu is trying to build a $1 trillion economy, and he has, through the Central Bank of Nigeria, decided that there should be a recapitalization of banks. What's your general overview?
Well, I think it's about time we do that, Sumna. Institutionally, the banks have weathered the storm since the recapitalization of the early 2000s, superintended by Professor Charles Soludo. We have seen some stress lines and fault lines within the industry, banking sector, especially in the last couple of years. We've seen the interventions to save some corporate governance issues with First Bank, tail end of President Buhari's administration. And also, some months ago, we saw the interventions also. CBN had to come and intervene. Some key banks had to have, new, what you call interim management put in place to safeguard depositors' funds, which is an indication of some fault lines within the industry. So I think there is nothing wrong with now saying we should recapitalize. Interestingly, Sumna, despite the fact that we are having an economy that is battering us all over the place. I don't blame CBN if he tells the banks to recapitalize, because after all, the banks are turning out profits, and telling us they are making a lot of profits, revenues and profits. So why not? If not, let us consolidate these banks and institutionalize corporate governance and the resilience for the banks.
All right, so taking a critical look at some of the 5 key banks, for example, that have licenses to operate internationally. A recent report just outlined sometime yesterday that, look, when we take the 5 biggest banks that have international exposure and compare what the CBN has said they should have, 500 billion naira each, that some of them don't have. In fact, there is none actually that has up to 500 billion.
Yes.
So there's a shortfall of about 1.4 trillion naira. Yeah. So how do they raise these funds to be able to meet up with the CBN recapitalization agenda?
The CBN went ahead to also, provide that advice for free, which is of the obvious. First of all, they can go through private placements, as we all know, to raise funds, and then they can do the M&As and mergers and acquisition to consolidate themselves and become stronger banks, or to review their strategy and say, we want to step down from being global bankers or international bankers and come and play, in the domestic market and choose, the segment of the banking ecosystem to play in.
Which is how they started.
Which is how they started.
Yeah.
Thank you. Or give a room for other guys, to step up to the plate. So I think it will, at the end of the day, it will tidy up the industry, consolidate even the ones that are stronger, make them stronger and more competitive.
And one of the areas I'm looking at is how private investors internationally can actually look into the Nigerian banking industry and see if they could invest. Does this policy attract investors? Could we, by chance, have foreign direct investments into the country because our banks can't be able to raise this capital locally?
There are two areas with regards to foreign direct investment. As you know, I'm very interested in investment and trade. For the banks, yes, it's easy for foreign direct investments to come in because, like I said earlier, we all know year on year these banks churn out numbers to say they are making profits, especially with reference to the top 4 or 5 banks we are talking about. So it's easy when you have a healthy balance sheet and you have, the prospects are looking good in the midterm for investors to come in, and we want to know the magic of how the banks are turning in profits, even though our SMEs and the informal sector are cringing under the vagaries of the...
Yeah, we've always been wondering what's going on, actually.
So, what is the magic? Whatever it is an investor appetite boosting, mechanism for year on year for investors in that sector to see banks churning out profit, to see their trajectory, moving out from Nigeria to the subcontinent and even the other sections of the continent, to say, why not let us go and see what we can do. These provide that opportunity for those that are interested in investing in our banking sector. And don't forget, our banking sectors also have their stratifications. You have the merchant banking, you have the other types of banking. So it's an opportunity for foreign direct investment. But more importantly, the consolidation of the banks with regards to the mergers and acquisition is also an opportunity for the industry. I reckon that some of these banks are already thinking, or even before this recapitalization conversations, obviously, for them to do mergers and acquisition, because from a strategic perspective, most likely some of these banks that are struggling below 100 billion, for example, may not necessarily attract the foreign investors, but look at how you can consolidate with your M&As and then put a healthy face forward, clean up your balance sheets, and why not attract foreign investors.
Now, Baba Yusuf, if we take this very carefully and we take a closer look into it, one of the major key issues that we'll be having is on ownership, bank ownership.
Yes.
There's going to be a lot of politics in it.
Absolutely.
People will be lobbying President Tinubu.
Yes.
Some people will be lobbying federal government institutions to still have more, capital base in some of these banks. Talk to me how we could play it fine without, what usually happens. I mean, you see this unhealthy rivalry in terms of ownership of banks between our billionaires and all of that. How do we ensure that the process will be seamless and then we do not have people trying to edge out each other just to own some of these banks? Because, I mean, some banks have been here for over 100 years.
Yes.
And being an owner of that bank alone gives you a lot of leverage.
Yes.
You would have seen what happened with First Bank.
Otedola
and the rest of them.
And others, yes. Well, as far as I'm concerned, anything that has to do with reforms, I always advise that I have what I call the 4 do's. And the 4 do's are the integrity of the process, and that is one. This CBN has come to roll out this, and let us have a transparent process. The integrity of the process will determine the credibility of the outcome, Somna. The moment you start this and you start, we see semblances of cronism, we see semblances of nepotism, we see, favoritism. It's already dead on arrival. And the fears and concern is not just about the owners of the business, because for the owners, quote unquote, owners of the bank, because within the ambit of the corporate governance for the quoted banks, there is nothing like a single owner. You have what you call the institutional shareholders, because the SEC statute says even the minority shareholder is equal to any majority shareholder. That being said, we have critical, let me call them critical stakeholders. For them, they would also like to see more funding coming, but of course nobody wants to lose control. But if the process is clear, transparent, and it is credible, Sumna, whether it is electoral process, whether it is a banking recapitalization, people will take it on board and own it. And because it is competitive, even if an owner is going to see that at the end of the day, a leading investor within a bank sees that clearly he or she needs to step down a bit for what? For sustainability, for longevity, and for better value for their share that they have invested. Why not? But if the process is not transparent, is not clear, is not credible, there's a problem there. Secondly, robust stakeholder engagements. I expect that we won't see silo activities, within or outside the banks. I also expect the AGMs to be more robust. We want to see, well, it's not going to happen now, but maybe this will open up to see the critical stakeholders within the shareholder teams, especially for the quoted banks, to unbundle this and let us not see this backsliding, what I call the drama of the AGMs, where shareholders have been positioned to favor a particular critical stakeholder.
We've always seen those that
yes,
during some of those AGMs it can be very dramatic. Actually.
Exactly. But this is a reality check for people. 500 billion is no jokes. Sumna, we saw recently what happened, like you said, in the First Bank, and we also saw recently the emergence of Mr. Femi Otedola taking control of the leadership of the bank. It's very healthy.
Yeah, that's First Bank. But some of these majority shareholders with this recapitalization may likely become minority shareholders. And,
yes.
It will be a different ballgame.
Yeah, I don't think it will be like 1 + 1 is equal to 2. I think we are not going to have an arithmetic, for people like us that like mathematics. I think you are going to have what you call differential calculus. Sometimes 1 + 1 is not equal to 2, sometimes 1 + 1 may be equal to 11. What am I saying? For the big boys that are doing this, they would already be engaging, within and outside the country to get what you call strategic partners and strategic vehicles within which they can be able to anchor more funding and get more leverage to stay ahead of the game. Yeah, and I'm sure they already have some answers.
To continue to maintain leadership.
Absolutely. And they will have credibility enough to get that funding to, to sidestep getting bigger players to come and do what you call hostile takeovers, also for them to still maintain that. But if they are not able to do that, this reality will have to happen. We must consolidate our banks. And then importantly, based on what you said, we should tidy it up. Proper corporate governance. Let it run. Don't forget that the banks are not running just on the funding of these so-called critical shareholders. The banks are alive and thriving and living for the likes of the First Bank and others for almost hundreds of years because of the deposit of people like me and you and those people in the market selling palm oil, the Okada riders. We need to protect their funds as well, and that is why this process is very important.
All right, Baba Yusuf, some time ago I was in a forum where we had discussions on, what happened previously. And in the past, someone actually raised this issue that, the geopolitics of whatever policy the government brings. Yeah. And so the person was like, man, when the federal government brought about a recapitalization sometime during the Soludo era, the banks in the north were swallowed up by banks in the south, and northerners were actually shifted out of the banking system more. For example, Bank of the North later became Unity Bank, and if you look at it, majority of the shareholders today is still tilted towards southerners and all of that, trying to ethnicize the issue. How much of this kind of drama should the CBN be anticipating ahead of time?
Well, first of all, for the purpose of disclosure, I'm a northerner. I'm from Kano State. But I think beyond that, we should grow and mature as a nation, Sumna. I think the key fact is that we need to tidy up our polity. We need to move forward. We need to be front-facing. Yes, the capitalization during the Charles Soludo era saw a lot of banks. Yeah, maybe some of the northern, inclined banks or whatever ownership, were not able to measure up, and that is the reality. We need to step up to the plate. We will not expect policies that should be driven or that should be in place to step down to where we are. We should be able to step up to where we should be. We should be more competitive. We should be more forward thinking. We should be more critical in our engagement in trying to see we get critical stakeholders and strategic partners so that we step up. Of course, in fairness, we also have fair investments of some northerners in those other banks that one may consider not north anyway. And why didn't they invest in the quote-unquote northern banks? As somebody that has been in the corporate and the private sector for very long, rising to the top echelon, I can tell you for free, whether northerner or southerner, the investor does not play ethnic card, does not play tribal sentiment. When those fat cats sit in the boardroom, what they are looking at the dollar sign and the naira signs, or for the sentiments of it. For those that want to have that emotional connection, and rightly so with their region or whatever, do the needful. Don't forget where you are coming from. Invest, in your roots and try to empower your people in any way you can. But I don't expect, and I will not advocate for standard to be lowered. And if that is done, we are saying in the north that we are not up to par and that we should continue playing this quota system, which I never believed in, which I was never part of. We are excellent. We should strive to stay there or to get there.
Now, I'm asking this question actually because when it gets to power play, I mean, within the Nigerian Federation, you will see people saying that, look, the first banking recapitalization was done on the Southerner, former President Olusegun Obasanjo. And here we have another Southerner as president doing the same recapitalization. What exactly is going on? Okay. So when those kind of issues come up, how should the Central Bank of Nigeria, including the presidency, address this? Because there are issues that will come up. I mean, you would have seen what happened with ordinary movement of the government departments to Lagos. That's
correct. But let us not also forget we had a very progressive and front-facing CBN governor in the person of His Highness Sanusi Lamido Sanusi. When he was CBN governor, he also took some drastic decisions, and we saw the backlashes also from the southern part of the country. But that being said, if you measure performance of Professor Charles Oludo, His Royal Highness Sanusi Lamido Sanusi, one will say they did a good job. They tidied up the bank. They reinforced the institutions from vested interests and ensured that they protected depositors' funds. Fantastic. The end result is very important. But I also agree that we should manage the optics and we should manage the sentiments. That is why, if you remember what I said in the do's, a robust stakeholder engagement. And CBN has a lot of work to do to speak to people so that they deflect and also de-emphasize this regionalism and ethnicity with regards to the objective. Also, especially because CBN is still not yet fully out of the storm with regards to the movement of the regional office, of deconstructing the CBN headquarters and moving some offices to Lagos, which is just a couple of months ago. So I agree, and I will see the concerns and sentiments. But as a northerner, I'm saying we should look at the big picture and step up the plate. That being said, also, from a strategic perspective, I would rather say the strategy for some of the region, for example, from the north, is for the investors to also look at other segments of the banking industry. Must we be in the bigger players? Is that where the big money is? What about the regional banks? Why don't you downgrade and focus? And we are the food basket of the nation. We have the agri-value chain. We have the solid mineral deposits and the mass human capital. So why don't we say, let us strategize, let me invest in the regional or zonal regional banks, or maybe the sectoral banks or the merchant banks, to say this is where we are going to play and play big, and now do what you call constructive disruption in that area and grow. You don't have to go and play in that. If you are not good in basketball, you can play golf.
All right, very interested indeed. All right, so one of the key things that we expect from this when the banks eventually recapitalize is better efficiency, customer service, and then of course our banks will be able to compete regionally across the continent and then internationally. We've seen our banks actually done very well within West Africa, and some banks trying to, Access Bank wanted to open, I think, in Hong Kong, and then of course some of them have opened in UK. When we fully recapitalize, how do you foresee the banking industry being like?
Well, I think life will go on. The banks will be stronger. Those that will not survive will either be swallowed or they will die a natural death. The banking industry will be healthier. I think that is the key point for me. But while we are at it, I think while looking at the bank, I have a small quarrel with this, and I think Mr. Cardoso, the CBN governor, and Mr. President should also look into this. I just mentioned earlier, the banks are turning profit year on year within an economic situation that is in the negative. How will the banks support the recovery of our economy, Sumna? We need the bankers to come and tell us, not just in terms of words, but in action. The interest rates are crazy, Sumna. They are smiling to the banks, their own banks, with cash in hand, with profitability expanding everywhere. How have they really given back to this society called Nigeria that made them, the economy of Nigeria that made them, the people of Nigeria that built them, for them to have branches in Hong Kong or wherever? People cannot walk into banks, citizens cannot walk into Nigerian banks and get credit lines and get loans for their SMEs.
And that's exactly where I'm very much interested.
Yes, and that is where I want to see the banks playing for me. So I want the CBN also, while it is at it, to have some provisions to engender, that to catalyze, if you like, promotion of the domestic economy support, if you like, because the agri-value chain is going to be a critical sector to the recovery of this economy. Power is key. We have the productive sector, and we have almost 80% of our economy driven by what? The informal sector. These guys are people that are in need of support. They are in dire need of support. We see thousands or hundreds of millions given to the big businesses, but we also need to trickle down.
Yeah, so, they prefer short lending than
exactly.
long-term lending.
Within the framework of regulation, within the framework of a CBN per se, that is where I want to use this opportunity to call on CBN to, by way of policy, ensure that these banks are not continue to be what I call the proverbial Shylocks, to also give back to society. I know it's business, but there must be mechanisms, because if you look at it, this MPR that was done, you see what they call the CRR, was increased for the merchant banks. Cash reserve ratio was increased for the merchant bank, for example, as an instance, from 10% to 14%. Essentially, at the end of the day, the MPR tells us that banks can actually borrow at a lower rate. If the banks can borrow at a lower rate, how is that translating into lower rates of interest rates for the citizens, if you get our, especially for the nano, small and medium scale enterprises? Is very critical at this point in time. We see the progression with the dollar, which I think is marginal, but sustainability is key. But don't forget, when the minimum wage kicks in May, the inflation may kick in back again. Supporting the small, medium, nano, medium and small scale industry should be a critical driver or pillar for success for this administration. So within these reforms that are going on, this is a food for thought for the CBN and for this administration going forward.
As we try to round off this conversation, there are two key areas I want you to focus on. First is President Tinubu has come to say he wants a credit system for the country.
Brilliant.
So that people can buy cars on credit, people can buy phones on credit, people can do lots of things on credit. You don't need to have all the cash in bulk and all of that. How can this banking transformation and recapitalization actually help boost the president's agenda? And then secondly, I've in the past wanted to see a situation whereby Nigerian banks are involved in huge mega projects. Most times when we have, like, for example, the Trans-Saharan gas pipeline project and we need funding for it, Nigerian banks don't have the enough liquidity, I'm talking in terms of dollars, to get into big projects. Could this reform and the recapitalization help to boost the liquidity that could be taken into big-time projects?
Thank you very much, Somna, for these two very important questions. First of all, you have dovetailed into my earlier call on this important point of supporting the small and medium scale. And you just reminded me, thank you very much, the president's intention to run a credit-driven economy. You cannot do that when you have your local banks, running double-digit interest. It's not going to happen. Therefore, I expect that in the next set of reform, modules of reforms that are coming in, for this to be taken into the consideration, and especially when government or CBN, government through CBN, bring out policies that eases some of these, plowbacks for the banks, to make it mandatory for them to reflect effectively and immediately. Otherwise, the noble intention and objective of this administration, President Bola Ahmed Tinubu, to run a credit-driven economy, will not work, with the way banks are operating. Highly transactional, non-strategic, I dare say. And that goes to the second question, which is also very important. And that is the reason. Because the banks are highly transactional, they are numbers driven in terms of, arithmetic progression, not strategic. They are not strategic, and because of that, there's no value innovation, and there's no value, creation, if you like. And that is why when the big ticket projects come, you see them struggling. And that is why I like the fact that they are consolidating these banks to look more serious and to be ready to drive, our economy. Like you rightly said, you have the big ticket projects, and then you see, of course, some of them have to be driven by the multilaterals. But we want to see, knowing that Nigeria is either the biggest or one of the biggest economies in Africa, our local banks that are bragging to be going into other subcontinents or continents, to be able to stand and say one or two of them can actually help us deliver, if not wholly, partly, majorly so, our, for example, the power sectorial reform, support, or the agri-value chain, or other sectors as we are talking about. We don't want them to take the back seat when these critical projects are coming on board, only for them to tell us they are churning in the numbers of profitability at the expense of the citizens of this country. That needs to change.
I mean, including funding projects in other countries.
Exactly.
But just before I let you go, what's your overview of President Tinubu's desire to have $1 trillion economy, which, I mean, it's been getting me quite excited because I've been dreaming about this for over 10 years. I mean, how could we have Nigeria being the largest economy across the continent, but our balance sheet is not up to $1 trillion, which is just less than what Apple actually has as a company.
Thank you. It's a noble idea, and I like the audaciousness of President Bola Ahmed Tinubu, because the visions must be audacious for you to make progress. So I like the audaciousness and the guts and the gusto with which he goes about doing things. But then, we need to follow that with the right strategy, and we need to follow it with the right sequence of actions for us to deliver. So recapitalization of bank, I understand, is part of the objective to deliver. But with all due respect, that is just a drop in the bucket. If we want to deliver a $1 trillion economy, we need to reactivate our productive industry. We need to get power on the table. We need to reignite our agri-value chain, which is a quick win. And then very well that we have insecurity issues that need to be addressed. A banking sector recapitalization is neither here nor there. If you have serious insecurity issues with no end in sight, that needs to be dealt with. So that is what I call the overarching strategy and the right sequence of events. Because when the milestoning in project management is done properly, when you deal with insecurity, then you are sure-footed going forward. When you don't deal with insecurity, then you may go and install a power project somewhere in this country, and you are 40% down the line, insecurity will collapse it. So you are now back, you have what you call slippages, the 1 step forward, 3 steps backwards. So the strategy should be robust, and the action planning should be proper with the right sequence of events. And then importantly, round pegs in round holes. People that have what I call situational domestic, awareness of our situation in this country, to domesticate policies so that we are on point, on time, and result oriented.
All right, thank you so much for your immense wealth of knowledge. Baba Yusuf is a policy strategist and the group CEO of Global Investment and Trade Company. We must thank you so much for joining us, despite the fact that you're still doing fasting. Ramadan Kareem to you.
Thank you so much